While the global economy faces uncertainty in 2025, one system continues to anchor global confidence. Across markets, investors, governments, and businesses, there is still one reference point: the United States economy. Not because it is perfect, not because it is immune to risk, but because structurally, the U.S. economy behaves differently from the rest of the world. In this video, we'll break down why the U.S. still sets the global economic standard in 2025, and why, even during global slowdowns, the world continues to revolve around American markets. When something breaks in the global economy, markets don't ask which country is growing fastest. They ask, how will the U.S. respond? That's because the U.S. economy isn't just large, it's system-defining. The U.S. accounts for roughly 1/4 of global GDP. American financial markets set pricing for global capital. U.S. interest rate decisions ripple across every continent. Whether it's inflation, growth, or recession risk, the U.S. remains the baseline against which others are measured. That alone makes it different. At the center of this system is the U.S. dollar. Despite years of debate about de-dollarization, the reality in 2025 is simple. When uncertainty rises, global money still moves toward the dollar. Why? Because most global trade is priced in dollars. U.S. Treasury bonds remain the world's primary safe asset. American capital markets are the deepest and most liquid on Earth. Even countries trying to reduce dollar dependence still rely on it during crises, not out of loyalty, but out of necessity. Another reason the U.S. economy remains central is its domestic structure. The American economy is driven less by exports and more by internal consumption. U.S. households spend more, adapt faster, absorb shocks better than most global peers. This consumer base gives the U.S. a unique advantage. It can slow down without collapsing. That flexibility is rare. Innovation is where the U.S. economy quietly resets its lead. In 2025, the majority of advanced AI platforms, semiconductor design leadership, cloud infrastructure, venture capital funding still flows through the United States. Not because of policy slogans, but because of ecosystem depth. Universities, capital markets, risk culture, and scale all converge in one place. This makes American innovation harder to replicate than it appears on paper. The U.S. labor market also behaves differently. It's more flexible, more mobile, and faster to adjust. While this creates inequality risks, it also allows quicker recoveries. Historically, the U.S. loses jobs faster in downturns, but regains them faster in recoveries. That pattern continues into 2025. None of this means the U.S. economy is without risk. America still faces high public debt, political polarization, inequality pressures, and interest rate sensitivity. But the difference is capacity. The U.S. has more tools, more capital, and more margin for correction than almost any other system. That's what markets ultimately price. The U.S. economy doesn't lead because it grows fastest every year. It leads because it absorbs shocks, it resets cycles, and it anchors global confidence. In a fragmented global economy, the United States remains the system others still orbit, not out of ideology, but out of structure.